So, you want to get rich, but not slowly, not the boring way, not by building something or learning something or waiting decades for compound interest to do its thing. You don't want to just be rich in retirement, you want it now. You've noticed that some people do seem to be able to skip the queue entirely, and now is your turn. Good news! There's a business model with a 100-year track record that needs no product, no factory, no actual profit. It runs on one thing only: other people's trust. It's called a Ponzi scheme. And today, as an accountant used to handling budgets of 100 million and more, I'm going to teach you exactly how to run one. A Ponzi scheme is an investment scam named after Charles Ponzi, a conman who made $20 million in the 1920s by pretending to purchase postal reply coupons in Italy at a discount and redeem them in the US at full price. The reality is, he didn't buy a thing, and neither will you. All he had to do was convince the earlier investors in his scheme that the money they were being repaid was profits from his efforts, when in fact he was simply taking the money from the more recent investors, minus a fair chunk that he'd skimmed off for himself. Unfortunately, Charles got greedy, and so he got caught. But if you watch this video to the end, you'll learn how to run a Ponzi scheme and get away with it. Let's start with the first of 3 simple stages: setting the trap. To get started, you're going to need to pick a niche. Now, you're not looking for the sort of misunderstood emerging markets that fake gurus use to sell courses, so there'll be no dropshipping or AI agents here. Investors are looking for markets that are familiar and reliable, making property one of the most common niches for Ponzi schemes. Wherever possible, imply that your offering is underwritten by some higher power, perhaps government investment schemes or contracts to provide social housing. Be sure to exaggerate both the scale of your enterprise and the length of time in which you claim to have worked in this industry, knowing full well that no potential investor is going to check the publicly available records to see what value of assets your business holds or when it was incorporated. Whilst the niche itself needs to feel familiar and safe to potential investors, the way in which your company claims to generate returns on investment should be hidden behind a fog of corporate jargon that demonstrates your extensive expertise in this field. For example, your marketing should state that you are offering a private arbitrage opportunity that you have exclusive access to through leveraging your network. Tell them it's too complex for the average investor and break it down in layman's terms instead of providing detail. Then watch how fast people pretend to understand, because nobody wants to look stupid in front of money. If you want to make a living, and a gloriously wealthy one at that, from running a Ponzi scheme, then you can't sell access to the scheme for pennies. Investments should be for substantial figures and in fixed amounts for 2 reasons. The first is that it lends credence to your business being legitimate and well established. No retail investor would suspect that a scammer would have the audacity to ask for £25,000 up front, all in one go. The second is you're going to need money from future investors to pay back earlier investors. So by having fixed amounts, you can easily calculate how many victims you can pay back by recruiting new ones. In return for their money, your investors are going to be impressed by your offer of unusually high and 100% guaranteed returns. What else would they expect, given that they now know that you are an extremely clever investor, operating in a familiar and reliable field with a serious pot of money to play with? Pick a return that is out of reach for what any real investment could consistently achieve. Something in the region of 12 to 15% on an annual basis should do it. You could then make bold claims that if your investors commit their money to you for a 5-year period, they'll get double back in return. Don't pick anything too outrageous though, as promising to double their money in only 90 days like Charles Ponzi himself is likely to raise the alarm and could bankrupt the scheme prematurely. Ensure that investors believe their money is with you for a fixed period of a number of years, let's say 5 as in the previous example. And for clever and complex reasons that you wouldn't want to bore them with, the repayments due to them don't start for a couple of months after signing them up. If you give them a good enough reason to believe, perhaps blaming it on the nature of the government contracts that are supposedly underwriting the scheme, then they'll fail to notice that the only reason you won't pay out immediately is to buy time to recruit more investors, and the fixed time period gives you a chance to run the scheme for longer, and catch more people in your web. If you've made it this far with your preparations to Ponzi, then you're ready to go live, which brings us into stage 2, buying their trust. If you want to promote a Ponzi scheme, you can't simply advertise on TV or in print. This would obviously attract too much attention, but more importantly, those methods don't allow you to build rapport with your targets and get a hold over that all-important commodity for our con, their trust. It's far better to promote in person because it's easier to win people over and confound them when you've got them on the spot. You'll want to do this at an event that is attended by legitimate businesses in order to piggyback off their credibility. This could be a national expo in a convention centre or a charity dinner hosted in a prestigious venue. Anything where you could pull someone off to one side and take 2 minutes of their time to talk them through the incredible marketing material that you created in stage 1. You'll become not only their personal financial advisor, but also their friend. You can tailor your marketing to meet their needs so that the promised returns can be assigned to savings for their retirement or financial security for the next of kin, for example. If they need encouraging, simply introduce some pressure sales tactics. Generate scarcity to focus their minds. Perhaps there's an enhanced offer that's only available at the particular trade show you're attending, where if they wait until after the weekend, the interest rate will be lower. Do as much as you can to get commitment from them there and then, before they have a chance to go home and discuss with their loved ones, or check the FCA register to see if you're actually licensed to be selling financial instruments. Keep cool. Even though your heart will be pounding and your mouth will dry up, this is exactly the moment you're here for. This is how you are going to get rich fast. Then, as if by magic, the penny will drop. Their eyes will begin to shine, the corners of their mouths will turn upwards in a smile, and they'll offer an outstretched hand for you to shake. They'll be happy to have found a secure way to maximise their money, and with such a respectful and trustworthy young man or woman too. You've got them. Hook, line and sinker. Now, to reward the trust that they've placed in you, you're going to need to actually pay your investors back. I know that sounds silly when the goal is to rob people of their hard-earned money, but the moment that a single penny is paid late is the moment that people start asking questions. In order to do this, you'll need to have signed up new investors before the first ones are expecting any money back, hence the delayed repayment period mentioned earlier. But luckily, if you've gone in around the 15% interest for 5 years mark, then the repayments, even including capital, are only likely to be 3.33% of their original amount per month. This means one new investor can therefore cover a month's worth of repayments for 30 prior investors, meaning the rate of recruitment needed to keep the scheme afloat is not unrealistic. But it is critical to the mission. Thankfully though, by reimbursing your original investors, you've actually just recruited your unpaid sales force. These people will be so proud of their shrewd investments in a reliable industry that they will actively start word-of-mouth promotion of your product to their nearest and dearest. You've not only bought the trust of your investors, you've also bought access to the network of people who trust them. You've infiltrated their family, their workplace, their WhatsApp groups. And you're going to help make this happen by incentivizing it. Give them a little kickback for every person they introduce. And you are going to prosper as a result. At this point, it might feel like you've made it. The money is flooding in, far more than you need to cover the returns due to existing investors, and so you can start skimming some off for yourself. Don't worry, nobody's going to question the rapid lifestyle inflation that you'll exhibit. They'll simply be in awe of your magnificence as an investor and a person. Now, stop. It's time to bring you back to reality. Your Ponzi scheme, just like every other, is only ever moments away from collapse. From day one, the clock's ticking, and stage 3 is about keeping it ticking for as long as possible. Avoiding the collapse. Even if you've advertised quietly, built trust amongst your customers, and expanded by infiltrating personal networks, there are still significant threats to your Ponzi scheme that could bring it to its knees. For a start, financial services are regulated industries, but you're obviously not getting involved in all that. You've got options here. One is to fake compliance, maybe by just using the right lingo, but you could go as far as to imitate the name and branding of a legitimate authorised firm. You could go bold and explicitly state that you are not FCA approved, but you'll have to sell some story about red tape, politics, extra costs, blah blah blah. Or the connoisseur's choice is to include in the sign-up process the requirement for self-certificating as a sophisticated investor. To them, you'll present this as extra layers of protection, or maybe even pretend there are tax benefits. It doesn't matter. At this point, they won't question it. For your purposes, this means you're legally allowed to market high-risk or unregulated investment opportunities to them without the standard regulatory protections. Once you've fended off the feds, one of the main problems you'll face is people asking for their money back. Not just an expectation of their monthly interest payments, because we agreed you would pay that. It leads to free marketing, if nothing else. But wanting their initial investment out means that you have more to repay, and therefore more new investors to recruit and less money for you to sneak into your own back pocket. So you make withdrawing feel foolish. Give them a better rate in the first place if they only take interest payments back on a monthly basis, with the capital to be repaid at the end of the 5-year period. Then you reward people for reinvesting by coming up with a new and even more exclusive offering that luckily appears 4 years and 9 months into their original 5-year term. This new offering should make them feel like an even more senior and selected member of your investment group, so that they commit to another multi-year term and continue to espouse the benefits of your business model. It's not affordable to keep on increasing the interest rate offered to them indefinitely, so a top tip here is to make them feel special by issuing them with shares in the actual limited company you are running. Now, I know what you're thinking, why would I issue actual share certificates in the scam company I'm running? I don't want to give the company away. Well, you're not doing. For starters, you're going to give them lower preference shares without voting rights, and you'll dilute their ownership every time you issue more shares to the next special investor. But regardless, there's no money in that company anyway. In order to outmaneuver the tax and accounting authorities in your jurisdiction, you're not just going to set up one limited company, you split it. You run the operation across a web of separate companies and special purpose vehicles, and the trick is to keep each company tiny so that they stay beneath the threshold that would mean you have to post a full profit and loss account or submit to a financial audit. Your investors will never think to cross-reference the claims that you made on your website against the limited balance sheet that you do have to publish. So you're good. In fact, you're really good. If you can keep this growing in perpetuity, you could achieve the sort of earnings in 1 year that you otherwise wouldn't have been able to make in 1 lifetime. You might just need to stock up on some magnesium to help you sleep at night. If this all seems a bit daunting and you're wanting to find a more legitimate way to make life-changing money, you need to watch this video now.